Welcome to TradeTheNBA.com. This is John. This report is for the 6th of January. We know it as the Befana here in Italy, where the witch comes with either a gift or coal, depending on how you've been. Obviously, the market got some coal the other day, having retraced pretty much its up move plus a little bit. Again, this is still sideways. Now, what was a significant change, and the sideways we recognized with the orange DOC here, stuck between cyan and red. But what we saw for the first time is a significant move with shorts increasing, midterm buyers starting to fade off a little bit, seeing no real benefit, but the huge spike of white MBI that suggests potentially move lower as soon as magenta moves under yellow. So a little bit of a change there, potentially. It really depends on whether or not we start to see the breakdown of the magenta uh, coming off this, and I would look for steel to dip below cyan. That should be the catalyst for any move that's going to take it lower. Otherwise, I think it's got enough to relatively sustain itself at this particular stage. Is literally going to be data dependent, I think, at this particular stage because and even that's going to be mixed. I mean, the irony is that a lot are looking for weakness to suggest the Fed's going to ease. I don't know that weakness is necessarily going to make the Fed ease. So that could be the fallacy of thinking that exists. From an NQ standpoint, already hitting zero. It had the MBI white spike as well, and it started earlier. So it was sort of the precursor. Uh, the previous day, it had already reached that crossover point. So it was just a confirmation, making it back to the zero there. Um, it's stronger from a DOC standpoint. It's in the no spark zone, which is between this -7 and negative uh, 7.5 range. -13 is what I meant to say. That from the green is -7, and the -13 is the white line. But when it gets caught in between there, and you get buy signals either from crossovers or you'd need to have a strong dip of the orange below red in this particular case to have it. It just sort of creates like a fizzle effect, and so I just always call it a no spark because it never really seemed to produce any real solid runs. And again, the battle of treasuries and this whole idea that the Fed must do what they think, which is to ease or at least give softer comments. I don't know because it doesn't make any sense. The reality is rates are rising, they're going to continue to rise. The only thing that would affect it, opposite side, would be just massive inflows into treasuries. But there is plenty of debt to buy, so it's not like you would affect supply because there's an unlimited amount of supply of that debt to be bought. Because whatever isn't being bought by the public is picked up by the Fed in a kind of strange circle of the Fed buying the debt that it produces. It's just printing money, is all that is. Oil rebounding slightly, still under 75, but right at the precipice, 23% range, and not reflecting a buy at this particular stage. So could see some continued softness of it, and if the numbers economically come out weaker, potential that that would be the same as well. Gold, though, filling back just a little bit, had those positive extremes right there, took care of that, but it's already on the click back up. And the euro, well, still modestly fading, still kind of holding in a range just because there's really no real incentive to have a euro. So the fact that it's even at 105 is insane. But these things happen in markets. Bitcoin didn't do anything, and we didn't expect it. Change matching the S&P, yes, the spike of the white magenta. So potential weakness there for a little crypto space. The ETH is a stronger chart, which is interesting because I think that there's been a lot of negative press recently on the Bitcoin versus ETH beyond all of the scandal stuff. But I think that ETH probably has more commercial promise which tends to be really what's being discussed. From a 50K standpoint, you can see we collapsed most of the day, basically filling in and creates the potential of series of bottoms all around the same area. And again, we were talking about the range being between that 38.23 and 38.90 on the high side. And literally, that's kind of that range we're playing in. And then the 60 became literally is like the center median line that we've been sort of flat off. You can see pre-market, we've got a nice bounce to it. This chart is not updated, which I have to figure out why of all of them it wouldn't do that one. So I'll figure that one out. As always, though, you can look for me on the Skype chat. Trade well. We'll talk again later. Happy Bafana.